𝗥𝗵𝗲 show. Thank you for always tuning in, and thank you for the new people that are tuning in. This show is about real estate and mindset. Ria, my co-host, she's talking about real estate, and I talk about mindset. So together, her and I, we bridge together how to have a successful life and business. So Ria is going to be taking over the conversation, but before she does, I want to welcome each and every one of you. Thank you for always tuning in. So welcome. My name is 𝗥𝗵𝗲.
My name is Ria.
And welcome to our show. Ria, going to pass the mic to you.
Book of Robert Kiyosaki, Increase Our Financial IQ. Today's topic is trends in housing. One of the reasons for the high price of commodities is that the world needs and wants more housing. Just make sure it needs and wants more housing. Example, demand for concrete in China, okay, this is in China, caused a shortage of concrete in the USA, which caused the price of concrete to skyrocket. Second, one of the reasons Robert loved investing in apartment housing is whether you are rich or whether you are poor, people will pay for a roof over their head. That's one of the basic necessities, is home or housing. So anybody that needs housing will pay for a roof over their head. Next, in USA, the population is expected to grow from 300 million to over 400 million in the next 2 decades. So if we look at it, the book was written in 2008. So I checked, in 2021, our population is already at 331.9 million. So the book is correct. Robert is correct. Over the next 2 decades, our population will be even higher, over 400 million. So Robert believed the price of housing will continue to trend up. Why? Because of the law of demand and supply. There's going to be more demand because there's going to be more people. So as real estate becomes more expensive, the prices go up, and difficult to afford, especially with a high interest rate right now, right? So we're being hit by high interest and high selling price, right? We have this is true right now, high interest rate and high selling prices. And as the wages come down, Robert believes this trend will cause more people to be renters. We're going to be a renter nation. One of the reasons why Robert and his wife Kim did not panic during the August 9, 2007 crash in the USA is Robert and Kim, they rent the real estate for cash flow. They are the landlords, so they real estate for cash flow. Robert and Kim do not sell the real estate. Another lesson, people who invest for capital gains and are people who buy to sell the real estate. So what does that mean? People who invest for capital gains are people who buy to sell the real estate. So this is the category of the fix and flip. So what that means is that if you buy a property and in, let's say, 3 to 4 months, you've done your renovation work and then you go sell it, right? So when you sell it, if you're successfully able to sell the home, that money, you will be taxed, and it's called capital gains tax. Okay? So that's what he means by people who invest for capital gains are people who buy They buy, but then they sell that real estate after they're done with the renovation. Now, when the subprime mortgage market collapsed, this was the 2007, the August 19, like what Robert said, August 9, 2007 crash. That's the subprime mortgage market collapse. The sellers panicked. So people who invested for cash flow, which means those who rent the homes to others, did not panic. So people who invested for cash flow, they did not panic. Because why? They hold it forever. They hold it for a very long time. They're not affected by the crash. In fact, they saw the opportunity, because what happened, the opportunity now is there were more people becoming renters. So they were, second, there was more demand in the rental space. So that's what they mean by they saw the opportunity. In down markets, there are more renters than buyers. In down markets, there are more renters than buyers. So a crash is generally good for landlords, but not sellers. Let me repeat that. In down markets, there are more renters than buyers. So a crash is generally good for landlords, but not for sellers. Robert also talked about demography is the destiny. And first lesson is that this is a very valuable source of information, which is the demographics. As the saying goes, demography is destiny. Robert says, watch people and you will know which way to invest. Watch what people do and you will know which way to invest. Once Robert knew that people panic, they buy commodities with their money, with their currencies. Then we have very valuable information for basing our opinions on the trends. So for an example, as gold went below $400 an ounce, Robert started to buy a little and buying a lot when it was $275 an ounce. Then the price of the gold went up. It went back up. In other words, Robert followed the trend down and bought a lot once the trend reversed. This is one of the reasons why Robert liked gold and silver, because there is always a market for it. And he says the gold and silver are relatively liquid, and if Robert needs the cash, Robert can get the cash pretty quickly. Less liquidity, more information. Since real estate is much less liquid than gold, than silver, than stocks, we need to be much more cognizant or much more aware of the trends in housing. After August 9, 2007, this was the crash. Many homeowners, many flippers, many real estate developers with overpriced condos are finding it hard to become liquid again. Why? Because nobody wants to buy it, because it was a crash. Now, instead of selling to get out, and most can do is just watch helplessly as their real estate value sinks into the sunset. Because nobody was buying, not a whole lot were buying real estate. The lesson is, the less liquid an investment, the more trend information we need. So the more information we need. Many people bought high and are now faced with selling low. An astute investor, what does astute means? Ability to accurately assess people or the situation and turn this into one's advantage. So an astute investor knows how to follow trends in order to buy low and sell high. Next, the financial bird of prey. Every time Robert sees construction cranes sitting on high-rise houses, he knows the end of the trend is near. This is the bird of the prey, the financial bird of the prey. So when you see cranes in the air, be aware. Whenever we see construction cranes, aka also known as birds of the prey, we are sitting on skyline, which means we know that the boom is about to bust. The boom is about to bust, meaning you will see that it's gonna go down. The values will go down because there's just too many birds of the prey. It means that the cycle has peaked, and generally there is nowhere to go but down. History and cycles. Final thought on trend is the importance of history and cycles. There is one historical financial trend Robert believes is worth watching, and that is the trend is 20-year. It's a 20-year cycle between stocks and commodities. Robert, who sailed for an oil company and flew helicopters in search of gold, became curious about why prices of commodities went up as prices of the stock went down. So there's an inverse relationship between stocks and the commodities. So as the commodities went up, the price of the stock went down. Conclusion of financial IQ number 5, improving our financial information. First, ultimately, it is not the asset that makes us rich. It is not the asset that makes us rich. Second, information makes us rich or poor. So for example, if Robert had bought gold, $800 an ounce in 1979, and we have to remember the book was written in 2008. So the gold in 2007 went down by 600 to 690 per ounce. So there's an up and down, right? There's a cycle. So in 1979, the gold was $800 per ounce. And in 2007, the price of gold went down by 600 to 690 per ounce. So if Robert bought gold in 1979 for 800, Robert will still be waiting to make his money back today in 2008 because of the drop in the gold price. So given how much the dollar has dropped in purchasing power, so for example, in 1979, this is just an example. Let's say the $1 was $1 worth, or this was actually 1974 before they took off the dollar from the gold standard. And in 2007, your $1 now is 50 cents. It got devalued. Okay, that's what it means when the dollar has dropped in purchasing power. So in 1974, let's say it's $1, but in 2007, it's now 50 cents. Your $1 is now worth 50 cents. That's what it means when the dollar dropped in purchasing power. You need more money to buy just a certain, piece of land or a certain piece of house. That means Robert would have to wait until gold reached 1,500 to break even today. So that's like 2 times, right? 2 times, because why? 800 per ounce, and now it's 1,500. So that's 200x actually. right? You need to double your money to break even today from 1979 to contrast it. Wow, that's a lot of waiting there. Now, the same is true for any asset. Example, in real estate, more investors lose money because of inadequate information and inadequate intelligence. That is why when someone asks Robert, is real estate a good investment? Robert would reply, I don't know. Are you a good investor? Are you a good investor? Most businesses fail because of a lack of good business information and a lack of good business intelligence, rather than from a lack of money. So again, it's all about the person, the information and the intelligence of the person. When people ask Robert, I have a great idea for a new business and I'm looking for some money. Would you be interested in investing in my new company? Robert's reply is always, I don't know. How many successful businesses have you started? Then it goes back to the person who's dealing with the money on how he's investing that money. Information and intelligence of the person again. As it turned out, Robert's experience in Vietnam War was one of the smartest things he ever did. Remember, he went to this camp where the old lady was chewing betel nuts and was selling gold. So standing behind enemy lines, the old woman chewing betel nuts taught Robert a very important lesson. And the lesson is that the old woman won because she knew the price of gold had nothing to do with the value of gold. The price of gold had nothing to do with the value of gold. By understanding the value, she knew why people were buying gold and why gold was important to them. That day, Robert learned that it is not the asset that makes you rich. It is in fact the information and the intelligence to process that information that makes us rich. If Robert can lose money investing in gold, which is real money, Robert can lose money in anything. That day, Robert vowed to become smarter because the old woman taught Robert that it is information and intelligence that makes one rich and not the gold. So those are my lessons learned on the topic of trends in housing. Let me know in the comment section below what you learned from this topic from the book of Robert Kiyosaki, Increase Our Financial IQ. So stay tuned for more of Alka and Ria Show.
Hey, Ria, amazing. That was great. You know what? I have a couple of questions. Maybe the viewers might also want to know. You talked about landlord. Now, when you think about it, especially here in Ontario, and I, as a landlord of one of my properties, there are advantages and disadvantages of being a landlord. And although for most people, they want to get into being a landlord because there's cash flow. You have a great property, which is going to build income, it's going to produce income, equity, and cash flow that, this, what everybody wants. But also your tenants, if you have great tenants, they will pay you on a monthly basis. So can you talk a little bit more about that? You mentioned there about the landlord bit.
Do you have a specific question about the landlord itself so I could be guided as to my answer? It's just so broad. So what question in terms of being a landlord and the tenant do you have?
Yeah, that, people who want to be a landlord, going into it may look glamorous, but in actuality, it's not really, because if you get the wrong tenants, then, like I had experience. So maybe you can just expand more on that, because it may look glamorous. People may want to be a landlord, but then in actuality, it's not, everything is not how it, how it is.
That is correct. And just like what the book says, right? It is not about the asset. It is about the person's information and the person's intelligence. So just like with your property, just like with any other property, it depends where the property is located. That's the information, right? That's the information, the intelligence of the person deploying the money. So where is the property located? Second, who are your tenants? That's the demographics is destiny. Who are your tenants that has the ability to pay you back? Because yes, let's say I buy a property, I buy a single family home that's on top of a mountain, but who are my tenants? What are the demographics? Now that
Right.
that asset in the top of the mountain will end up being a liability on my part because now I have to pay for it. Now let's say that property is now not on top of the mountain but on a city. But let's say, for example, a deadly city. I'm not just going to name a city. A deadly city means
Right.
there's
Yeah.
crime. No, it's a bad neighborhood. It's Class D neighborhood. Yes, it belongs in a city, right? But then again, the demographics, with demographics is destiny. Now you have who can afford to live in a single family home in bad city, then like Class D, right? Class D. Then so would you think in a bad economy and as a recession, would they have the ability to pay you back?
No. Yeah.
Most likely they're not going to pay you back. So that ends up you paying for your single family home. So now it becomes a liability. So that's what Robert means by the it's not about the asset, it's the information and the intelligence of the person that would deploy the cash into this certain location. And that's where it is very important to know your market. Well, to invest, it is very important. Number one thing is to invest in yourself because you are the best investment. Because now if you have that knowledge, you know your market, you know who's going to be your potential tenants, you can make money. So you are your best investment. It is not about the asset. It is you, the information you have, the intelligence that you will possess as you continue to study on real estate and your market.
Perfect. That's so good. Well, guys, you've heard it right there from Ria. Invest in yourself. Know as to what is your niche market. Know, explore, research, do many, many more researches that you need to do because if you are wanting to get into real estate, it's a long-term game. And if you're wanting to be a landlord, that's amazing. But you have to know, as Ria said, you have to know what is the information that you are looking for. So research, without prior research of getting into any market, you are going to lose, right?
Very true.
Yeah. So we have come to the end of another amazing show. So as I always say, as we always say, is that, knowledge is just knowledge, but knowledge without the implementation of what you are doing, how you are going about in your real estate journey, or if you are getting to real estate, what you need to do, how you need to go about so you don't lose on your money. So it's not a liability, but you are, gaining the proper information so that you are taking care of your asset. So thank you for joining each and every one of you. Really appreciate, we always appreciate your valuable time. Andrea, thank you for that. So we will see you the same time, same place, come tomorrow morning. But in the meantime, make the rest of the day your